Yeah, this is a critical theme because it has so many different read-throughs, both for U.S. policy, the future power of OPEC, the ability to satisfy future demand growth. So we believe that U.S. shale is very clearly in its twilight, meaning the best years are clearly behind us. We were already there before the recent price collapse. In 2024, U.S. shale grew by its slowest pace since its inception, if you exclude the COVID times. And so some people may think that that is as a result of government policies, the lack of drilling permits and land. We completely disagree with that. What we see is Mother Nature is now the gating factor to the ability of U.S. shale to grow. What we can very clearly see are wells in all of the three major basins are getting less productive. They're getting gassier, so gas cuts from oil wells are rising. Companies are having to really push the envelope in terms of trying to maintain production, decline rates are rising, et cetera. And so coming into 2025, I would say consensus was for growth of about 150 to 200,000 barrels per day of black oil growth at a time when demand was expected to grow by about 1.2 to 1.3 million barrels per day. And if we reflect on the past 10 years, why is the twilight of U.S. shale so important? Over the past decade, non-OPEC production has grown by roughly 5 million barrels per day. U.S. shale over that same time frame, which is a component of non-OPEC supply growth, grew by 6. And so were it not for the rise of U.S. shale, we would have been in a massive supply deficit, and that is where we're going in the years ahead. Now, we've had the price of oil collapse now to roughly $60 WTI. We are in the death zone for U.S. shale supply growth. It's like a mountain climber on Everest, and you get too high, and if you stay there, you die. That is now where we are for U.S. shale. We think that companies will be dropping rigs. Just last week, we had the rig count fall by the fastest pace in about 4 years. And so we see that trend continuing, and the expectations of growth this year will be declines. To your question, how much and how quickly, we would think on an exit to exit, so the end of this year relative to the beginning. We think at the current oil price, U.S. shale production could fall by 500,000 barrels per day. And at $50 oil, it could fall by 1 million barrels per day. And so if we're in a market today where the balancing factor has to be destroying short cycle supply growth, and that seems to be the environment that we're in, it's going to be U.S. shale because they are the highest cost, the highest decline, the most capital intensive production on the planet. And we are now at the point where we're going to be losing barrels.